Okay, so I want to explain why your mortgage rate is really a lie. The one thing I can point to is this document that your mortgage lender is going to disclose to you at the point of application and also at the point of closing. This is the third page of the loan estimate. Yes, you have your interest rate APR, as described as an APR, annual percentage rate on here, but what I have highlighted here is TIP, total interest percentage. So your interest rate may be 6%, 2.5%, whatever the number is. That is not how much interest you're paying. How much interest you are paying is being dictated by the time or length of the loan and the balance. Hence why we're seeing nearly 70% in interest. So how could one, who's got a $200,000 home or a mortgage end up paying $240,000 of interest and then equate that to a 6% interest rate? It's pretty hard to do without understanding how mortgages actually work. They're front-end loaded amortized debt. So the first 5-6 years are predominantly interest-only payments. You're not actually paying more principal than interest until you get to roughly 18 or 19 years in. So again, time, length, and balance, the amount of debt that you have taken on is going to dictate more of how much interest you're paying versus what the interest rate is going to do. The interest rate is going to dictate your payment on the length and the balance of that debt. It does not necessarily dictate how much interest you're going to pay. So understanding that is vital. So what we do with Replace Your Mortgage is we break that down and say, okay, here's how much interest you're going to pay on a mortgage with your existing income, not paying extra, not doing biweekly payments. But what if we adopt a different cash flow strategy, and number two, a different debt tool, like a simple interest line of credit that is not front loaded with interest, so that when your dollars go in, dollars go to principal first, then interest is calculated. On a mortgage, that is completely opposite. So we're going to adopt a different tool and a different cash flow strategy that can encapsulate all of your income, bypassing the bank checking and savings account where your money's just sitting over there dying. We're going to flood it into this line of credit and maintain liquidity so that we can tap into those resources when we need to pay expenses. So if that makes sense, give me a thumbs up, hit the like button, maybe subscribe if you want to. Otherwise, check out the link that we've got in the description below. Y'all take care. God bless.